There could be at a point in time where we're at in history that new construction from a residential buy and hold standpoint could be better, than that whole like buy a shitty house thing or a shitty multifamily. Hey there. Welcome back to another episode of the Collecting Keys Real Estate Investing Podcast, the podcast where we teach you how to make massive income. Not just passive income, because who cares about passive income? Maybe Dylan. I don't know. I don't.
Yeah, sometimes. I mean, other days where I feel like this is great, and other days I'm like, these are more headache than they're worth. So
when it's not so passive, you're like, I don't like it.
Yeah, whoever tells you it's passive is lying or selling you a course. So
yeah. Do we have a course we could sell on that one? Mike's not here, so you're gonna have to stick with Dylan and I. I don't know if we have a passive income course, but we could sell it if you want to buy it. At least I know some gurus that'll sell it for us.
$9.99.
No. It's $997.
Okay.
Yeah. Because people don't know. People know the 999 trick. They don't know the 997 trick.
Well, isn't it? Aren't you supposed to give like a low cost item and then upsell once they get the
small, medium, large?
Yeah, I don't know.
That's actually funny. So, okay, I was just on a scale, like a sales call with a scale community prospect. Okay. And I was like, you got any questions? Like, we're talking, having a good time. He's from the Northeast. And at the end of it, he's like, I do have a question. He's like, all right, be honest with me, man. Do you have any upsells after this? Like, am I going to pay you and then you're going to upsell me? And I was like, and he has participated in somebody else's course, somebody that lives in Ohio, I think near you. And you know the shtick there. You know the shtick there. And I was like, honestly, dude, we should get some upsells, but we don't. Like, we legit have one product, and that's like it. That's like show up to our community and do. I think I laughed so much inside when he said that. I was like, A, that's a great question. B, I appreciate your honesty. And C, it's just freaking hilarious that he had to ask that, because there's so many dumbasses out there. And I know, because I've had, like, Mike and I have hired coaches, and they talk about stuff like, just like business coaches, but then they talk about like their model after you get to know them. And they're like, you got to always have an upsell. Always have an upsell, brother. Yeah. You're like, yeah,
you hear that from like Hormozis too. And it's not a bad business thing. I think the problem a lot of people run into is like that initial thing that they pay for. They get so little information that it almost forces them to give the upsell. And it's like, you have to deliver some kind of value before you can even ask for that.
And I will say that, yes, from a business standpoint, it makes a ton of sense. But like when you're trying to build a community, it makes less sense, because it's hard to run a community when all the people know all you're doing is trying to monetize them. And at every corner, you're trying to sell them something. And so for what we're doing with the scale community, we're not trying to upsell. We're not trying to like make this a huge profitable enterprise. We're trying to legit build a community, because we have a lot of fun with people, and we learn shit too from people. So, I mean, I've learned a ton from people in the community, and it's cool when you get a community from different backgrounds and all that stuff, because then they're interesting, and you can learn new things that shit you didn't even know you need to learn.
Yeah. And you can just literally post in the Slack channel, be like, hey, this is going on. And you're going to get 4, 5, 6 different responses from people who have been in that situation before, or at least know what questions that you should be asking.
Exactly. And in maybe other groups, you're going to get a post that links you to a Stripe account to pay for the one-on-one coaching for that answer. By the way, so you guys, it's going to be a little bit better episode, because Mike is in Thailand right now for the next month. So we did pre-record some shows before he went. It was weird because he texted me today. So I went to Thailand, like, I don't know, 3 or 4 years ago. 4 years ago now, maybe right before COVID happened. And, I've told Mike about my experience, and there they have a lot of like ladyboys. Like, it's a big part of their culture. And in particular in Bangkok, there's this area called Ladyboy Alley, which is literally just like a alley, which is like a road really of just bars and ladyboys. And so Mike was texting me last night, and he was like, hey, can you give me the grid coordinates for that Ladyboy Alley? I was just wanted to make sure, I'm not near it. And I was like, I know what you're doing, buddy. So he might come back with a new perspective on life.
I hope he's having a great time.
Anyways, I had to bring that one up. Marketing. I was talking to you, and I talked to about this to the scale community in our coaching call today. It's like, it's been super slow right now. Like, October's like a big month for us historically, and it is a big month. Like, we got a ton of closings. Like, we have a lot of money coming in, a lot of accounts receivables from our wholesale deals and stuff like that. But right now, like this week in particular, and a little bit last week, it just felt like new leads coming in have been slow. There's like not a lot of low hanging fruit. that just comes in. Like when you're doing big marketing batches, you have like that one like slam dunk deal out when you're doing a big batch and you're expecting 3 to 4 to 5 deals a month. Like I don't know if you have this experience, but there's always that one where you're like, you just know it's a deal right away and you have still to work for it. But we haven't had any of that. It's been super frictiony. I don't know what is your take? Are you feeling the same thing or what? Because I know you're ramping up marketing.
So shame on me. I didn't send out any marketing in September because we had that baby come in.
Oh yeah.
And so I just sent out, my largest mail to date, which is like 24,000 postcards, I think.
Yeah.
But they got sent out every 2 to 3 weeks. So like some of those are starting to pour in, but lately it has been kind of that where you have to work for these a lot more. And like the time from initial outreach to contract is a lot longer than a lot of the slam dunk ones that we used to have. In fact, like, I don't think I've had one since probably April or May.
Right. That was easy.
That was easy. Yeah. And like, I feel like now, like to this, we were still are flipping some places. We have 2 or 3 that are going right now, but I just listed one that's in a great part of town. Like, I thought I underpriced it and we only had a couple of showings and I was like, oh shit. We got an offer and I took it. But if those like, because you can see on showing time, like how many appointments you have out throughout the week or whatever. Yeah. We only had like 2 or 3 and like nothing was really scheduled after that. Wow. So it kind of like shocked me a little bit to be like, okay, or is this going to be like the new normal going forward? Because it was not what I expected by any means.
Right. Wow. That's interesting. So on the sell side too, you're kind of seeing it feel like grindy, not just fast at all.
Yeah. And I mean, don't get me wrong. The offer that we got was great and I'm happy to accept it. And if they come back with, some line items on inspection, I will gladly fix everything that they want. Yeah. But that's so much different than the norm than even what it was like 5 or 6 months, 3 to 4 months ago.
Yeah. I would say we're kind of in the same boat. Like even the last house that we flipped and sold, we didn't get very many showings, but we did have like 2 like legit buyers that put in offers. And I can't remember why we selected one or the other, but one I think had a contingency on it or something like that. But like, they were good, full price offers and all that sort of stuff. And one I think was a little higher than the other. And so it was like good, but it felt like the buyers that were looking were actually buying as opposed to just a bunch of like people coming in and walking away. Like even when the market's hot, it feels like you're like, oh, I've got 30 showings in like 2 days or something crazy.
Yeah, like that. And like, let's say, so my ARV for this place was probably like 220, 225. Mm-hmm. We listed it at 214.
Okay, so
I did that intentionally. Like, and typically I would maybe go even higher a little bit, but I underpriced it a little bit, and I'm kind of glad I did because the worst thing I think you can do right now is overprice it, then you price drop, and then now it's sitting for 3 months.
Exactly. I wonder too. And we talked about this, I think, a little bit last episode before this, just like the election, and as we build up to that, people not wanting to make a decision that it will impact their finances because they're scared of what's going to happen. I don't know whether you're on a Kamala side or a Trump side, like they're both kind of just going to sit on the sidelines.
Well, my personal opinion with this and why I will continue to invest in real estate is both of them, regardless of who is elected, are going to continue to run multi-trillion-dollar deficits, and which will cause inflation at some point or another.
Whoa. You're saying that they're not going to change everything like they say they're going to change?
Right. Yeah. And if inflation happens, then real estate is a good place to have your money parked. Right. Like it's economics 101. So could there be a short-term deflation if there's a recession or people lose their jobs? Yes. Yeah. But if you have reserves and your place cash flows and you're not relying on one exit strategy, I think you're going to be okay. I think you're going to be better than okay.
Yeah, I agree. Like, it doesn't matter. You know what else is a good time? Like, this is a really good time. It used to be anyways. I've been more disconnected during this election than I usually have been in the past. Not that I'm like super into the politics, but I just feel like I've been traveling quite a bit the last couple months and just stuff like that. I've just kind of not been paying attention. But usually it's a good time to start selling guns and bullets because all like the extreme Republicans are like, you got to stock up on ammo. The Democrats, the liberals, they're going to
take your guns away.
They're going to take your guns. And it's a great time if you want to make some money to sell things that might get illegal or become illegal. So, there's profits to be made all ends of the spectrum on the election.
If you look at, I know we're getting a little bit off on a tangent, but for the audience, so copper, like the commodity that people trade, it's been referred to as Dr. Copper because essentially its price is indicative of inflation or disinflation or deflation. So it's basically like a 1-in-1 correlation. If the price of copper goes up, expect to see inflation. If it goes up at a slower rate, disinflation. If it goes down, deflation.
Really?
And it has like a very, very good track record. And right now you are seeing it increase like pretty substantially.
Really? So you think inflation is still on the rise?
I think it's still going to be a problem. There's still, I think it kind of will rear its ugly head again coming around after the election, because right now I think they're artificially trying to prop some things up.
Yeah. They're not going to say certain things anyways, or, you know, even if it exists, even if you're at the Fed, like they know how to play the bureaucracy, right? Especially if you want to keep it down.
I mean, and you see some of the articles, you know, that say like, for commercial real estate, you know, is in a slump or took such a big drawdown in price, or investors are expecting a 6 to 7% return, which is dumb if you can get like a 4 or 5% just buying government bonds.
Yeah.
But on top of that, like they are talking about REITs or like big commercial $1 billion companies and funds.
Right.
You as an everyday Main Street investor, if you are either burning a property or fix and flipping a property or wholesaling a property, like that, your returns are so outreach from that. It doesn't even matter on a percentage basis.
Totally. It's way different, dude. It's a totally different ballgame. You're talking like an institutional fund versus you in your local market doing something to make freaking money.
Exactly. Yeah. Exactly. So like, if you see those fear mongering headlines, like, oh, I shouldn't invest in real estate because Wall Street Journal says it's a bad time. They're not, it's apples to oranges comparison.
Yeah. Also compared to all the other bullshit New York Times and whatever, put your favorite news source in there says on any other topic that you happen to be an expert
whether
on.
that be Fox or CNN or, you know, pick your poison.
Pick your poison. Whatever the topic is that you feel like you're well versed in, that's not real estate. And then if you see that article, it's likely that they suck at it, right? It's like, it would be like if you're like really like into baseball, like you're a baseball person and the New York Times writes an article about baseball and telling you about the sport, you'd be like, you're an idiot, because they would be. They're not experts. Yeah. They're less likely to be experts in something that you're an expert in. So don't listen to them.
Which makes you wonder, okay, if they write an article about something completely related, you should expect to have the same level of competence in something that you have that competence in.
Exactly.
Right. There's a name for that. I actually just don't know what it is, but it's the same shit.
Yeah. I think it's like called like, I don't know. Don't listen to stupid news people that don't know stupid.
Don't listen to people who are paid to write polarizing views on anything.
There you go. That's a good one. Let's acronym that up. Let's figure that one out. We'll wrap it up, put it on a t-shirt.
But I did want to talk about, I know you're building a place and I got a piece of land that honestly is like, it might just be worth the risk because I can buy it so cheap, but it's like an infill lot, like that's adjacent to like, it's just before you get to like the cul-de-sac part of the street, right? Like the little half circle.
So like a residential area.
Yeah, residential area, but that cul-de-sac is all multifamily. It's like those 4-unit brick boxes.
Oh, interesting.
That you see. And he owns this piece of land. I can buy it for $7,500.
Okay.
The problem that I'm running into is like the topography. It's a little hilly. Yeah. So I don't know how much that costs, like level it out.
Yeah.
And then 2, the way it's shaped is like there's only 12 feet of street frontage. And then it's like a piece of pizza that goes back, that expands.
Yeah.
And so never done anything with land. I don't know if it's viable to even build something on that because of how that's set up. And it's kind of landlocked where you can't really go behind it because there's residential homes. You can't go to the left of it because there's homes, and the right of it is a river with a bridge.
Boy. So there's usually when I see those things, there's a reason why it hasn't been developed, right?
Right. And that's my first thought too.
So it's 12. Is there any way to get easement access? Like, even if it's like adjacent to your piece of pie, that's like coming from the street, that's like you get 5 or 6 feet from the other person for like a driveway easement?
I'd have to talk to that seller. Yeah. It's possible because right now, the way it looks, at least from Google Street View and all this stuff, is that the neighboring property to the left, their parking lot would be on this vacant land, even though it probably is not supposed to be.
Oh, interesting. So you're saying they're already encroaching it a little bit?
Yes.
Yeah. You could, then there's probably some deal you could work there, I would imagine.
I told him, the seller, I was like, hey, you know, I might go through with this, but before we close, I will order and pay for a survey just to see you know, where the boundary lines actually are.
Yeah. I would say that would be important. The other thing I would talk to the city about is like, what is the minimum egress that you have to have to, like, for a driveway? Like, they're in every city and municipality is like very different depending on the length and the width and all this sort of stuff. And so that would be the one thing I'd be curious about, especially if you wanted to build something more than a single family home on it. They might have minimums like, hey, if I want to build that same fourplex, although it fits here on the footprint, does it have that same egress capability off of the property, especially with the river there and all that sort of stuff? You're kind of like boxed in, it seems like.
Right. And I think that's, well, the guy, I have no idea how this guy even came to own it, because he has a foreclosure against him for unpaid property taxes of like $800. and he can't afford to pay it. Wow. So I don't understand
that's pretty
how it even came to be. But so, my point being is he doesn't have the funds obviously to build it, probably.
Yeah, of course. Yeah, most likely not. So I guess the access would be the first thing I'd look at. And then you said it's kind of hilly. Is it like, how big is this lot? What do you mean it's hilly?
Hilly as in like, how I told you there's a river that flows through it. Mm-hmm. It kind of slopes kind of down gradually.
Oh,
like towards that I guess is what I mean by that. And it's not small. My county website always puts things in acreage, but it's 0.23 acres.
So a quarter acre.
Quarter acre.
Okay.
So it's not small.
No. Yeah. And the slope isn't a problem because you can always just build a foundation that would accommodate the slope, right? That's not a big deal. So there's that you definitely have some land clearing if there's like trees and different things you're going to have to do.
Yeah, nothing like that.
Yeah. One thing I was talking, it's a good timely conversation. Like I was talking to the scale group this morning in our coaching call about this, because as you mentioned, I'm doing a land development play where I'm just doing literally a spec build for a single family home in a development in a nice area, probably like I would call it an A-class area, Spokane, 10 minutes from my house. There's a lot of reasons why I chose that area, mostly because it's near my house. And if it was across town, 45 minutes away, I wouldn't want to show up as often, which means I wouldn't learn as much. And I want to learn more about the spec build process. So I've got a GC I'm going to partner with. We're going to figure this out together.
So I'm going to interview you now.
Yeah.
How big's the lot?
So I don't even fucking know. It's, I don't know the acreage. It's 50 by 262 feet deep.
50 by 262 feet deep. Yeah. Okay. And my high level questions would be, with the GC partnering, what approximately would you expect to build on a price per square foot basis or something like that?
I have no idea. Great question.
You have no idea.
So I do have kind of an idea. So I've talked to a few people. The cost per square foot in our market is probably going to be like, for above ground square feet, like 180 to 200 a foot, depending on what you build, depending on the finishes and all that sort of stuff. So this house will be a rancher. It'll be a 40-foot wide rancher with a daylighted basement because it's on a hill. Okay. So it's a view. Yeah. It's a view lot. So it should trade for a little bit higher than a typical build. So that's a good piece.
Well, what do you think it'll be sell for on the back end when you're done?
So there is 20 lots in this development. 2 or 3 sold last year for just around $700,000. And then there's one listed right now for $785,000. The guy next door to me is trying to sell the one he's building right now. One he said he's going to sell for 1.2. So I've kind of taken these into account. 1.2 is like way off the charts. Like it's crazy, right? But when I looked at it, I was like, okay, so a year ago we had 700. We've already got like 8 other foundations going that are in the ground right now that'll sell next year. My guess is they're going to be trying to list for the high 7s and come in somewhere around 750, low 700s. So my like, hell yeah, I did really well is like 750. My, okay, I guess it's average would be 700.
So if you build a 2,000 square foot home at $200 a square foot, you're all in for $400K. You sell for 750. I mean, I'd say that's a pretty good ROI.
Yeah. And then I've got the lot, and I've got some soft costs, permitting and all that stuff will come into play, which, be a 5 to 10 grand. And then the lot I paid 130 for, and then I'll probably have like 10 to 12K in financing costs, because I will get a construction loan on it. Because a really good piece of advice that I learned from somebody in the scale community who does a lot of new builds was that, you might have the money now, but nobody's going to lend to you on a half-done project, so you might as well just get the lending now. And the way the way spec home builds work is actually pretty cool. It's very similar to hard money, where it's prime plus 1%, so it's actually a better interest-only rate than hard money typically. They'll do 1 point origination, and then they will loan up to 75% of the appraised end value. So essentially, say they're like, yeah, we think it'll be worth 750. They'll loan up to 750 or 75% of that, and they'll include the land because I paid cash for the land. So they'll include the land in that. So I can get money for the land essentially. And then as you want to, you can do construction draws, usually like quarterly. You'll do, so you say you spend 50 grand, just like you would on a hard money loan. So it's very similar. It's like somebody asked that actually on the call. It's like, it seems like it's really close to that type of lending. It's like, I'm like, it's actually better.
They're charging you on the full loan amount though, not just the money that you've used during that period, like a HELOC would, right?
The interest part of it, I don't know. I actually haven't talked to them about that. I've got 2 lenders on the hook that I'm working with right now to figure that. Like I don't think that they charge you interest. This is my understanding, that they charge you interest except for on the balance of the loan. Where if you took a hard money loan out and then you had construction costs, they charge it all the same. But in that case, you've already withdrawn, say, $200,000 for the acquisition of the property, and maybe you've got a $50,000. I feel like hard money lenders are really good and scrupulous at making extra margin anywhere they can. So,
dude, lending in general, like you just go through a HUD and you see all the $50 to $500 charges, line items, and you're like, God damn,
it's awesome.
How long do you think this process will take?
A long time, I would say, because I bought the land in the fall. We can't build in the wintertime here, so I have to wait till the spring. But I'm a man of action and wanted to take massive improve action, so I bought the lot. And then this gives me the next couple of months to figure shit out. So I'm working with a designer. I'm working with the GC, and I'm going to get a bunch of bids I'm going to try to get 3 bids for each of the sub trades, electrical, plumbing, framing, all that stuff. So I'll have time to figure that out. Then I'll have time to like line up the schedule and get on the schedule early with those different trades. And then as soon as we can, maybe if it's a light winter, like February, I could break ground, and I'd be hoping to sell it by late summer.
Makes sense.
Yeah.
I mean, I always see the development plays, especially around town, like the big communities too, that are building like, hotels or big commercial, like apartment complexes, or even spec home communities.
Yeah.
And I know they can make a killing, but they're also the most subject to really macroeconomic risks and time risks.
Absolutely.
Because once you start, you're committed. I mean,
yeah. So say in your case, let's go back to your piece of land, right? You got $7,500. You're like, hell yeah. I mean, that's pretty low risk, but say that's a lot of money for somebody. Maybe you have to re-entitle it. Maybe you're like, the only way this works out, if I can put a quadplex on here, single family homes is not going to work for whatever reason. And you have to rezone it from like R1 to R4 or something like that. And say that takes 6 to 8 months. Like it totally could. Right. So now you've got your money tied up for 6 to 8 months, and then you have to build it, right? And that on a quadplex is probably going to be 8 months to a year, right, to build it. So you're basically almost 2 years into something that you decided to do, and the economy, let's be honest, in 2 years always just different.
Yeah, no, I mean that's exactly right. And it's like in 08 and stuff, like the people who got hurt the most, like your everyday people got hurt too, but I mean, builders didn't build for 10 years for a reason.
Exactly.
They all went out, and they were all too scared to come back.
Exactly. There's so many guys I've talked to that they're like, yeah, I was doing new builds in 08 and now I don't do that, right? Because they just lost their ass. And the part, when you hear the term spec build, that means speculative. And so the speculative part of that is that the risk, you're subject to huge winds. Like guys, like here's a good example. I know people that were building in, prior to 2020 and into 2020. And they were hoping, they bought up lots before COVID happened. They bought up 10, 15, 20 lots from these land developers. And they're like, yeah, my exit price is going to be 600,000. Well, those exit prices after the freaking market took off were 900 to $1 million. So that was just built in, right? Oh my God, I was going to make 150 grand per house, and I made 350 per house. So that you get those huge swings, but you also get you're also subject to the huge downside risk. And so I think the guys that do it smart, you have to be well capitalized, and you have to be buying land. If you're going to do several of these, right, you have to be buying land ahead of time so that you can actually keep your pipeline busy. And where the risk is you got to be able to build the house and cover any of the debt, or if you're paying cash, be able to withstand a year, 2 years sitting out there, not coming back to you.
Did you know Did you know a lot of the electricians, architects, designers, and stuff already, like before you did this, or did you have to reach out to those and find out?
No, because like what I found in my side of the business on the flipping is I deal with crackheads and meth addicts
Yeah.
and stuff like that, and so they're not the same trades. You can use them, like like flooring guys and stuff like that, and painters. Those are all kind of the same. But like I didn't really know a lot of house framers, foundation guys, flat work guys, excavation
Mm-hmm.
guys. Those are things I just don't use. So that's why I partner with a guy who is currently is a general contractor, because he's going to bring all those to me and I can do it fast. And I'm, like I said earlier, massive imperfect action, right? So like it's not going to be perfect, but I'm going to be able to move so much faster than if I was just kind of out there in the ether trying to figure this out myself.
Totally. The reason why I asked that question is because you actually answered it wrong, but I'll do go through anyway.
Nice.
No, not because you're actually wrong, just because
you're wrong.
My point of this next thing is like you always hear people say, tell people you know what you're doing. Always talk to people about what you do. There's a deal that got presented to me from a friend of mine who's also a wholesaler in this business, and I flipped a house over in this area before. It's actually that horror house that I talked about that I owned for like a year.
Oh yeah, yeah.
But during that time, I met a family who really wanted to live in that area, but they were getting advice from a realtor that said, "Don't buy this; you won't ever resell it, et cetera, et cetera." But my point being is, he sent me this property. He's like, "Hey, do you want to flip it?" I was like, "No," but I know of a family who might want this because they really want to build in this area. So I texted him. I was like, "Hey, you guys still looking?" He's like, "Yeah." And we're going to meet over there tomorrow. But literally, I hope they don't listen to this, but our price is 400,000. I told them 500,000.
Oh, wow.
Right. And because it's a really great part of town.
Yeah.
And my point being is you can't do too much networking, because this is like a very atypical deal where I'm not selling it to another investor. I will sell it to a retail person.
Right.
But
right.
I know a lender who will do double closes, even with like for this type of transaction for them. And that's all just because of going to the networking events, talking to people, and et cetera, et cetera.
Totally. Right. Exactly. And, it's funny you bring that up too, because this is, I guess I'm going to take this down another path too, is in my pod mates in GoBundance that have encouraged me to take this path. We're talking like about how do you scale this, because it's different, right? When you're building, speculative, technically you can just build a house and throw it up on the market. Right. But that's like a pretty risky way to do it. Like that's the standard way most builders do it. And if you run into a lot of the builders, not all of them, but they're just like we are as far as house flippers go. They're just average dudes, and they aren't usually in masterminds and groups. Like I feel like the real estate investor community, we've really come together over the last decade and a half and like really created community and recognized it's a team sport. It's not the same on the builder side as much. Like they have builders associations, but that's kind of like an old school thing. It's just less than you would see with us. But so how do you scale that? And part of it is how do you build a brand with anything in networking, and like having, like you'd have like a realtor open house, but instead of doing that is having networking events at your buildings. Not like not open house, but like a networking event where you're kind of the person that's putting it on. And it could be a totally different topic. It doesn't have to do anything with house building, but you have this brand new, beautiful vacant home that you've staged. Why not use it for a party to network? Same thing with your flips. You could do the same thing.
It's like the whole premise of, do you guys have Homerama where you live?
Never heard of it.
Okay. So basically like a lot of custom builders will compete for like the best house, and they'll build 5 to 10 houses in like a subdivision.
We have something like that. Yeah. Okay.
Yeah. Probably just called something different.
Yeah.
But they literally put on a show for like potential home, but like potential buyers for one, but two, that way if you're ever considering buying a home, you're like, oh, I really like that house. So then when you went to Homerama and you looked up who built that house and you reach out to them, it's like all comes down to marketing, which it seems like most business in some way, shape, or form comes down to some level of marketing.
100%. And it's getting your brand out there. And I kind of thought about this idea. I have a friend in a totally different industry, and he was talking about, he works for a marketing company and they put on events. Has nothing to do with them being the marketers. They're just putting on events for, it could be a public action thing that they're calling for, but because they're the ones putting it on, they have this authority, and then they become the focal point of that network. Anytime anybody needs marketing, they're going to call them, because guess what? Everybody in the community knows who this marketing company is. And the same thing can go for your business. You don't have to kind of be in the shadows, and you just have to understand who you're trying to connect with. To your point, like your situation, like with selling that house, it's not a typical real estate investor. So going to the RIA meeting is not going to be the one that it's not going to accomplish that for you.
No, it's not. But it's part of it is just figuring out how to sell the freaking deal.
It is. It is, dude.
That's what it comes down to.
Dude, it's so true. Right now, like this is so top of mind. So we're displaying different various properties in Spokane right now, and they all like, it used to feel like you could just dispo it and there's just enough investors lined up. It didn't matter what it was, they would buy it. And then where Mike and I really cut our teeth was like doing the weird shit and connecting with the different people that aren't necessarily you're going to meet at a RIA. You talked about this land development play. So we have a guy that he doesn't go to the RIA meetups. He's loosely engaged in the real estate community, but he does like a lot of new builds. He specifically looks for infill lots or lots he can subdivide, sell the house off and build a house on, right? High level guy, like he's building all these places for cash, selling them. Like he doesn't really use debt, doesn't use hard money and much of that. Like he's been around a long time. And so great guy to know. And there's other buyers like that or buyers agents. When you have that weird one that's like a retail-ish type buy, can you call like, we just dispoed one. So this guy out of Western Washington, which is like 4 hours from us, had a deal over here. He needed help dispoing. He asked a couple other wholesalers and like, oh, we can't move it. Sorry, it's not a deal. He came to us. And we called an agent that had a retail-ish flipper that wanted to flip, but has no other connection to the industry except for through his agent. So guess what? Agent's making $5,000. I think we're going to make like, it's going to be a small deal, like $6,000 on the JV side of things, but still it's like money that just fell into our lap because we were able to connect a buyer to this house that was a non-traditional buyer.
Agents are great, honestly, to work with because they will have, instead of one buyer, they represent, 5 to 10.
Yes.
And my piece of advice, anyone that's starting out this, and I don't know why more people don't do this, is because they just try to mass market it. But if you have a deal, you get locked up, literally go on PropStream or Zillow or your county or whatever, filter by cash buyer within a 0.3 mile radius and start calling those people.
Right.
Because like proximity is like usually the biggest determining factor other than price of who's going to buy your next deal.
That's really
I've sold so many deals like that.
Yeah. Well, they're buying in that neighborhood. They like that neighborhood.
Yeah. And especially if they bought recently, like, oh, I have 2 crews or I can have both my guys just go back and forth and keep them busy. Like that's gold to them.
It is gold. It's good. That's good advice.
One thing I wanted to ask you about, because like, my wealth started to go up when I stopped having like squirrel syndrome, going from Airbnbs to residential assisted living to just sticking with the wholesaling and the flipping.
Yeah.
And also like, it's just very repetitive and can get boring after a while. Yeah. And that's where you kind of have to like this nose to the grind and keep going.
Yeah.
How did you make that kind of decision with learning something new, diving into this new build, et cetera?
Yeah. Good question. So it's adjacent. I'll start with saying it's very adjacent to what I'm already doing, running all of our flips, doing all the construction. It's also a passion that I wanted to get into and learn anyways. But it's also at a time where we're winding down a bunch of stuff, talking about the squirrel syndrome. Mike and I are selling one of our businesses. We're shutting down another business and we're focused locally hardcore on the wholesale flip model. Like keep doing the wholesales, keep doing the flips. We're not even, I say wholesale flip, like I guess if like a good opportunity came, we'd buy it. But we're really focused on that cash accumulation, drive, because we know how to do that. It's easy. It is boring. Fortunately, in this business, I have partners so that my time allocation to that does not have to be 40 to 60. I'm not like you, where you're just running your business, which is a good thing because you're getting 100% of the proceeds of everything you do. Mine is split up, which is fine. We're able to multiply that, but it still leaves me with time.
What's funny is I bet if you look at our net incomes, which we won't disclose here, but I bet they're pretty close.
Probably
with with me being a single operator and what you guys do as on a team of 4 or 5, whatever it is, with this larger scale.
Yeah, exactly. So, and I think that there is a limit. There's a ceiling to that, right? Where there's probably a different crossover where it starts becoming, you start getting better and more and more and more. And then you hit a cap, and the same thing with us. And I bet you like income to income, depending on how I have to split it up, is not too far off. When you hit that cap,
but I can't go to Thailand for a month and
you cannot do that
to keep making money.
You cannot do that.
So those are the trade-offs.
There is an advantage to partners. There is an advantage to that. And then if your partners are okay with you building a new spec build and trying to figure your shit out, then that's also a fun thing you can do too.
Totally. It's a good process. I had a contractor today who I sent to walk a property for me, and he wants to start getting into new builds, or he wanted to do build to rent. Mm-hmm. And I'm like, I love the idea.
Yeah.
But it's almost like a thing where so few people do it. I'm like, why don't more people do this?
It's hard. That's why. because you still have to like typically new build costs are higher than buying a used property. I mean, that's just the thing of it, right? However, I will say this, and then we can close this out. I was at the GoBundance event last week in Scottsdale, and there was a company called Origin Investments there, just talking generally about like high level market update. And they got, and this is granted big giant $1 billion, basically a REIT, right? They're buying big assets. They make Brandon Turner's company look small, right? Big time stuff. But they're talking about how they got away from the buy, fix, sell model several years ago and found that actually it's cheaper long term, and you build more equity by doing shovel ready projects, buying and building apartment buildings. And I happen to personally know somebody that does that at a pretty high level. He owns quite a few units outright. And then obviously this company's not talking about that because it's a shitty way to go, because their fund is obviously doing well. And so there could be at a point in time where we're at in history that new construction from a residential buy and hold standpoint could be better, than that whole like buy a shitty house. And I think a lot of people on the cash flow side are feeling the shitty house thing or a shitty multifamily because there is a lot of CapEx. And his reasoning that he explained was, why would I go and buy the 1985, 300 unit apartment complex, and it's going to take me 5 years to go through the process of like fixing it up and raising the rents, the value add process, when and then across the street, somebody else builds a brand new 300 unit apartment building, and it takes 5 years, the exact same amount of time. Which one sells or trades for more? It's the brand new one. He's like, so we're going to buy the thing. It's basically going to trade at the same anyways on the buy and all the fix and the time to do it. And there's so many unknowns with that, so many risks, when I could just go put a shovel in the ground, build the thing, and it's going to already trade for more than that. So like that was kind of their logic there. So I think there's some good logic there when it comes to like making that decision. The difference is the capital that you have to have and the capital that you have to lock up, because we've all been so used to this idea of like buy it, fix it, and burr all your money out of it, so it's an infinite return, which seems to be challenging right now. I think we as off-market operators have the most opportunity to do that, but it's still tough to cash flow.
Yeah. And like if you want to cash flow more, then you have to take out less leverage.
Yep.
And less leverage means that your ROI isn't the highest.
Exactly.
So it's always what lever you want to pull at a specific time. But that's interesting. I think new build is it could be on the plate for us someday too, but just not right now.
Yeah.
I think we're going to stick with one lane for a while.
Don't squirrel it, man. I agree. I think that's good strategy for everybody, except for, once you get a little hungry and you're ready to do something else. Anyways, that's all. I think we're over time here. Thank you everyone for listening to Dylan and I ramble about things that we're truly interested in. Hope you find some interest in that as well. Maybe we'll riff this for a few weeks while Mike's gone, and it'll just be the Dan and Dylan show.
Yeah, or just send us a DM and let us know what you want us to talk about or speculate on.
That would,
and then we'll have content, and I don't have to go find it.
Exactly. Hit me up at InvestorManDan on Instagram is where I'm most active. If you don't use Instagram, I don't know who you are. Dylan
you're a Gen Z.
You're a Gen Z. That's true. And if you're Gen Z, I'm sorry, I can't help you.
We don't have TikTok, but I'm Dylan Does Deals on Instagram. So.
Is there an underscore in that?
There is. Dylan _does_deals.
Yeah. Okay, cool. I like it. All right, guys. Hope you enjoyed this. We will catch you all next week. See ya.
See ya.